Thanks for watching this video. Today I would like to sharing about the coursework which I did in school. It's called Wise Toys PLC. Wise Toys Private Limited's PLC is founded in 1992. It creates and manufactures the electronics toys for young children that promote learning in a playful way. The chairman, Billy Day, and the general manager, Melinda Spades, are assessing the feasibilities of introducing the new products to its assessing range of educational toys. The Toy Associations has reviewed in their annual findings toys trends that are expected to drive industry sales in 2021. There is emphasis on develop the children's social, emotions, and cognitive aptitude with fun and engaging musical toys. Melinda is proposed that Wise Toys penetrate the market for such musical toys, and the pioneer product for the company's musical toys range would be guitar inverter kits. The kit comes with everything a kid needs to build an electric guitar, and the apps guides them through the building and learning to play it. A market research firm was engaged to conduct the feasibility and study for the kit. The market research report proposed that kit could be sold for $90 per unit. Demand was projected at 72,000 units per annum for at least the next 5 years. Demand is assumed accrue even though through the years with price remaining unchanged. The bill for the market research report amount to be $20,000. The production line would need to be expanded by purchasing and installing new machine for the manufacture of the kit. The finance manager, Alan, estimate machine costs and installations would be total 20 million with the estimated useful life of 10 years. Residual value if machine disposal occurs between year 5 and 10 is estimated at 1 million. The projected production's output from this new installation should be at least 4,000 per month during its useful life. Raw materials for the kit productions would be 25 per unit, and the value of raw materials inventory was estimated amount to 1 month's productions. Labor costs associated with the kit would increase by 90,000 per month, and utility expenses raised by 20,000 per month. Selling and distributions overheads would be divided at 1% of sales revenues. An injunction unit next to the production line is currently being leased to a textile recycler. The rent is up for renewal at the proposed revised rate of 180,000 per annum. Per annum means that is a yearly basis. The extensions of the production facilities would lead to the fulfill of any potential lease from these units. Allen also brought to attention that Wise average account receivable was 40 days. Account receivable means that the sales is done already, but the payments yet to be received and is estimate 40 days to receive in this case. And account payable was settled in 35 days. Accounts payables means the purchase is done, but in this case is they will settle the payments within 35 days. Wise Toys cost of debt was estimated at 10%. Cost of debt means you borrow from the banks, estimate is 10% per year. And the cost of equities usually is come from the equity partner or the shareholders, and they will estimate 18% returns. So we are using is cost of equity and for the company structures. Capital assets are depreciated using straight-line methods. From this point, straight-line methods means, okay, let's say I have 1 million assets. For example, is like a house. You have 1 million house, or you have 1 million car, and then the cars using can be 10 years. So the value they are using 1 million divided by 10 years. So you have the residual value is like 1 million. Current capital structures of the company is like 40% from debt, 60% from equity, and the income tax rate is like 18%. Melinda also has a concern that Git will cannibalize sales of existing toy range of Wise toys with potential loss to operating cash flow by as much as 800K per year. And both the chairman and general manager has asked Ellen to consider all the above figures when making the economic and financial evaluations of the Git projects. Thanks.